Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Atticus LeBlanc with us from PadSplit. He is the CEO of PadSplit, which is a co-living application. I am super excited to have him here. We don't often talk about unique strategies. And so co-living is something that is really a good entry point for a lot of beginning investors. So I'm super excited to have you here, Atticus. Thank you very much for hopping on the show.
Yeah, appreciate it. No, pleasure to be here, and thank you for the opportunity.
Absolutely. I told you before we got on here, we like to start with stories. We like to hear kind of how people got to where they are today. I know you've been in real estate for a long time, so I'm sure you got a good story. Why don't you take us back to the beginning and tell us how you got to where you are today?
Yeah, probably two beginnings. First one is just that in 2003, I was 23 years old and realized that I could buy a house for less than what I could rent one for. And at the time, you may have heard that mortgage underwriting was pretty lax. I was definitely a beneficiary there.
So they say.
So got an 80-20, i.e. 100% loan for a house that I bought out of foreclosure, moved into, fixed up. And ultimately, every business I've started, I can kind of point back to that original one.
And sorry, to cut you in here. So 80-20, yeah. What is, you mean 100% of it was financed?
Yes, 100% financing. So yes,
wow.
By the bank. It was 80% primary mortgage and then a 20% HELOC. And I was making 30 grand a year and could close on a house for a whopping total of like $2,500 out of pocket.
Man, no wonder shit hit the fan. That's pretty cool.
Yeah, right on. But it worked out well for me, and I'm sure there are a lot of other people that it actually worked out really well for.
Mm-hmm.
And then the second beginning, so I left my full-time job in 2005, went into commercial real estate brokerage on the land side, which really meant that I was at the tip of the spear. Or the front line when everything hit the skids. And so my pipeline of deals dried up in mid to call it September 2007, where it was like, oh gosh, I can't, there's literally no end in sight for what I can do. I've made a total of $10,000 for the year, was supposed to have banner closings. And then right after my first son was born, boom, boom, boom. The three major deals that I thought were going to make me $1 million, like just vanished.
I hate it when deals crash at the very end, man. That is the worst.
So of course I went back to look at housing and saw that I had because of that original home purchase, I had my HELOC that was open. I had $50,000 in a line of credit and then about 10 to 13 grand or so in the bank. And looked at, all right, well, what can I buy in Atlanta for less than $50,000? And this was November 2007. And there should have been fewer than 50 burned out shacks in just terrible parts of town. And instead there were 1,200 houses and they were livable and in a lot of places.
Wow.
And no one could tell me what was going on. But I could do math well enough to recognize that
something's going on there.
Yeah, prices hadn't been this low in 40 plus years, and where rents were, I could essentially buy a house all in for around $35,000 with renovations, and rent it for $950. So,
wow, that's on. They say the 1% rule. That's almost a 2% rule. That's insane.
Yeah, so I invested what little savings and what credit I could find, and then just absolutely borrowed to the hilt with 13% interest money and 3 points rolled into the loan and 100% financing, personal guarantees, the whole bit, and just took a hard gulp and started buying, and really was all mostly in the affordable space. They were housing choice, Section 8 rentals early on. I encountered this rooming house concept, which I'd never even heard of while I was out there in the market. And then in 2009, two guys who were renting rooms came and asked if they could come rent rooms in my house because their house was being foreclosed. And
Interesting.
that was my first aha moment to, wait a second, like this is going to be much more affordable for you. You don't have enough income to qualify for anything else, even in 2009 in the depths of the crisis. And I would not only get someone in very quickly where I'm not afraid of my air conditioner or my appliances walking away, because that was happening a lot at that time, but I'm actually going to earn more cash flow significantly than I would have under a traditional rental model. And so that was the first aha moment, and I've been iterating on that since. And it's proven over and over again to be a vastly superior cash flow and a real opportunity to make a positive impact in people's lives as well, which has definitely been gratifying, and that evolved into a large scalable co-living platform that's a really technology company today.
Nice, man. I love it. And I've found I've had a few people on the podcast from overseas, and I found that this concept, this co-living concept, is much more prevalent, much more commonplace, especially in like London and over in Europe, where it's not as prevalent here, but it's definitely catching on, especially in those markets that are so expensive, like Seattle,
Sure.
like San Francisco, places like that. And as an investor, I mean, you mentioned before your cash flow is actually higher, and you also your risk is lower because you don't have one person renting that house. Similar to multifamily, where you have multiple units, you're
Yep.
not putting all of the burden on that one person. You're splitting it across so many people. So it sounds like a great concept, a great idea. Um, the problem that I see, I've thought of doing this myself with my own rentals at one point. The problem that I've kind of pops into my head is just the wear and tear on the houses, and just the
Sure.
headache of actually having to manage these. I know PadSplit kind of helps out with that, but I'm sure you've been in the multifamily space at one point. What is the difference in managing a co-living unit versus something like multifamily or mobile home parks, RV parks, something like that?
Yeah. So I think quick background. You name it, I've managed it just about. Uh, we had we've owned and managed over 700 units at this point, multifamily, commercial, single family, Section 8, private market, co-living, et cetera. And I think you hit the pain points on the head. Even looking at that model that I started in 2009 with zero technology, it was still significantly more cash flow, but it was absolutely more work. And as I came to revisit the problem after having exited some of our apartment deals, what I was thinking about was how do you operationalize and take away that pain for a traditional landlord such that this looks really close to a traditional SFR or multifamily investment, but still has 2x net returns. And there were three categories that we needed to address. The first thing was in 2009, I was literally going every week to pick up rent as I didn't accept cash. I was not so brave as that. So we were collecting money orders
Mm.
from the houses on a weekly basis. And then you would put one of those little
On a
plastic
weekly
boxes
basis. Okay.
on a weekly basis
So you charge per week, or is it
per
you
week.
just
Yes,
wow, okay, interesting.
per week. And happy to get into why that is later. But it's important. And then you would have to put the little plastic box over the thermostat, and you would have to
Hmm.
manually go out there. It was a tremendous amount of work, and then you were taking all the individual phone calls. whenever there was a dispute between folks, and you had to check on the place regularly. So the three categories of services that I wanted to provide when I started thinking about the idea for PadSplit was, one, automatic demand gen and screening, and so that getting that move-in process super, super fast. Because whether you're talking about co-living, single family, multifamily, commercial, you have a couple different cost categories that are super impactful to your bottom line. The two that are most often forgotten are your turn costs and your vacancy costs, which are major detractors. If you look at your P&L over several years, it is a huge impact. And single family rental investors particularly underestimate consistently how much those turn costs impact their rate of return over time. They're like, oh man, I've got this great rent. Like this house behind me, right here. This was a housing choice rental, and I absolutely fell into that trap. Had a large family renting the house, and it was great until it wasn't, and was getting what I felt like was a fantastic rent for the market, and then they moved out, and I had a $46,000 insurance claim.
Oof, that sucks.
Yeah, exactly, and like that was a bit of an anomaly, but you have a lot of those where you'll see.
Yeah,
5,
I mean,
000,
when you
10,
have multiple units, that can happen. It becomes more of a commonplace occurrence, even though with one unit, it's an anomaly. When you're looking at multiple units, it's not.
Yeah.
And that's definitely a problem.
And so in co-living, and specifically for PadSplit, like filling up those rooms was the first thing. And so we have a process that screens, qualifies folks, and gets them moved in within 48 hours. Our average time to first booking in our biggest market here in the Atlanta area is 2.4 days. So imagine listing your property. Yeah. And you get your first booking within 2.4 days. For most of my houses in Atlanta, I'm getting that booking within 24 hours. Las Vegas, which we just opened, is average 1.4 days.
Jesus.
So super, super fast. The second thing is payments processing. I knew that no one could go to the properties or would be willing to go to the properties and collect those rents. That model doesn't scale. Electronics payment processing technology has changed dramatically since then. The other aspect is if you can bill all-inclusive on a weekly or per payday customized basis, your rate of collections will skyrocket. We have a low-income, low-credit population.
Say that again. So the with this model, the more frequently you bill someone, the more likely you are to see higher collections. Interesting.
Yes.
Okay.
So for our population, our average income is typically less than $30,000 a year. And yet, and by the way, like we don't have traditional rental deposits either, like traditional large security deposits.
Okay.
We verify income. We verify criminal background. We verify that you are who you say you are. And then we check to make sure that people don't have more than 2 evictions. But even with that very basic screening strategy, our collections rate has never dropped below 96.5% ever, including COVID, like soup to nuts, been 5 years. Now, including move-in fees and turn cost charges, it's above 99%.
Wow.
I mean, so you're on par with like Class AAA payments rates.
I was gonna say that doesn't happen with anything I own. 99%. That's great.
But the reason why is, again, weekly all-inclusive payments. I can't tell you over the course of my career as a property manager how many times I've seen people end up under eviction because they decided to pay their phone bill or their cable bill or whatever it was that happened to be due on the 13th. If you have a rental, you're coming into real estate. When is rent going to be due? It's going to be due on the 1st of the month. All right. Well, Gabe, what day of the week is December 1st?
Who knows?
Bingo. Bingo. And like, if you're working full time, do you know which day you get paid? Like, we're having this podcast on a Friday. I'm pretty sure today is Friday. So if my rent and all of my utilities are due on the same day, guess what? I don't have to budget.
Easier to plan. Yep.
Yeah, it's so much easier. And if I happen to get paid that same day, where I know, all right, $170 is going to cover my entire living cost for that week, and I just have to remember to pay it today, it shouldn't be a shock to anyone. That bill gets paid much more regularly because they don't have to make a choice. Oh, do I pay my water bill or do I pay my rent? Or do I pay my water bill now and hope that so and so is going to pay me back and that this other check that I'm waiting on is going to come in, and you remove all of that crap.
That makes a
And
lot of sense.
what it means though is that, like in this house behind me, which has six people billing every week, that's 25 payments per week. Well, guess what? Landlords don't have the ability or the will to track 25 payments a week. And if somebody misses one, they certainly don't want to be able to track that person down. So we do that as a platform,
Okay. Yep.
and we
I
get
see the
all of
value
those
there.
payments collected for you. We follow up with any sort of, oh, you lost your job and you're waiting on a new one. And then the last one is, if there are resident disputes, we have both technology tools in product that to help facilitate some of that. If Johnny stole your peanut butter or Susie's playing music too loud, and we also have 24/7 customer service to take care of that. So those are really the three
Gotcha.
things. It's like
Yeah. So
filling
it's
rooms
not so
quickly, keeping
much.
them filled, and then collections and customer service.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah. So it's more than just I mean, we're kind of splitting our conversation here, but just specifically talking about PadSplit, it's more than just an application. It sounds like there's also property management that's included in there. That makes a lot of sense. One question that did pop into my mind when you're talking about, getting weekly payments from your tenants, does your lease mirror that? So do you have a weekly lease that re-ups every week, and you're able to start an eviction if they miss? I don't know. It'll completely depend upon the state that you're in, the local laws, all that stuff. But yeah.
Yeah, so most jurisdictions now, or a lot of them, have these Airbnb or short-term rental laws. So minimum stay is 31 days right now. We do offer different levels of commitment, whether it's 4 months, 8 months, 12 months, and pretty soon we'll give owners the ability to set their own commitment lengths. On average, though, our stay, even when we were just 1 week minimum commitment, was and has remained around 9 months. So people will stay for a long time. The first resident that I ever tried this model on in 2009, she's still there. Like the third person to move into that house, she's still there since 2009. This house behind me, the first PadSplit, like this guy is still there in that room. And so you have about 20% of your population that just never leaves.
Yeah. Yep. That makes a lot of sense. And then the other question that popped up for me here is, we're specifically talking about home owners. So someone who owns a home and then rents individual units. I've also heard this done as kind of a master lease and subleases. Does this model, have you seen it work with that kind of concept where somebody rents out a house and then subleases it, each individual room, to other individuals?
Yeah. We have a couple people on our platform now who are in that arbitrage master lease business, where they recognize that they can go rent either a larger single family home or a larger apartment, and then subdivide it, furnish it, and actually put it on our platform and create cash flow that way without actually owning it. It does happen. The caveat I would give is make sure that your owner understands what you're doing. So that
absolutely.
that
would be
one of my life rules is no surprises, or certainly try to avoid surprises if you can. And it's always better to be upfront.
Yeah. Well, and the only reason I mentioned that is, co-living, renting out individual rooms is a really good method especially for people who don't have, or who are in a really expensive market, or they just don't have a lot of capital to buy multiple units, to buy multifamily or anything like that. And so I was just thinking from the perspective of someone who really wants to get into real estate. They don't have a lot of money. One option is to go out there, get a lease, obviously talk with the landlord, make sure that they're okay with subleases, but then rent out the whole house and then do this co-living situation with the individual rooms.
Yeah. Oh yeah. I mean, we've had other folks who have moved into houses or apartments on their own for themselves, and then rented out rooms in their residences as well.
Oh, okay.
So that's another possibility. We had one guy actually who works for us, who was a member. Then he was able to buy a house. He bought the house, lived downstairs in one room, and rented out another 3. Then he moved out and rented 3 more. So it went from kind of 4 residents to 6. And then he did it again on a condo. So you can absolutely go from zero to creating pretty significant passive income quickly.
Cool, man. I love it. All right, I did take a peek at the clock. We have gone through our time. Thank you very much for sharing everything that you've shared so far. I feel like this is a really interesting niche. So it's time to jump into the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with books or any form of education. Give me 2 recommendations, 1 for general life wisdom and 1 for real estate specific.
So real estate specific, I guess general life wisdom, I'll go with Atomic Habits by James Clear.
Yep.
That's one of my go-tos. Real estate specific. It's interesting because I don't necessarily have any books. It's maybe School of Hard Knocks. If you want to learn about real estate, know the market, walk the neighborhood, get to the heart of the problem. That's where I've always learned the most.
And I always have a lot of respect for people who go out there and door knock. I tried it for like 2 seconds when I first started, and I was like, this is not for me. I got to do something else.
It's not necessarily door knock. You can do it driving and walking without actually door knocking. Just shaking hands and hugging babies.
There you go. All right, moving on. Next question. This is for your younger self. So if you could go back to the Atticus who was just buying that first rental back in, what'd you say? I think it was 2008 or something like that. Go back to him, look him in the eye, give him 1 piece of advice moving forward.
Start raising more capital and don't be afraid to push even harder on purchases. No question about that one.
Definitely, man. I would second that one. That's great advice. Next question is your Superman strength. We are all gifted with unique strength that we uniquely give to this world. What is your Superman strength?
Creative problem solving.
Perfect. Good for real estate. That's for sure. Moving on to the next one. This is mentors. Mentors are key to everybody's journey. None of us are islands. We all stand on the shoulders of giants. So who is one mentor who has contributed to your career today?
Absolutely. I will say both my parents. I won't name one, but yeah, certainly just instilling confidence and sticking to your values, understanding to be yourself.
Perfect, man. I love that. Thank you for Atticus's parents for helping him get to where he is. And that leads us to the second to last question. This is the United States. It's a big place, a lot of opportunity out there to invest. What is one metro you're most excited about investing in today?
Jacksonville, Florida.
Ooh, you and everybody else. People love Jacksonville. That's crazy. I feel like probably the last 4 or 5 people who I've asked that question on this podcast are always like, they say Jacksonville or what's the other? There's a couple big metros in Florida.
Tampa's been another big one.
Tampa's been a big one, and the one that actually just got hit by that hurricane. Fort Myers. Yeah. Jack, Florida, man, it's blowing up. Gotta love it. And that leads us to the very last question. This is for the listeners. You've given us a lot of good advice. I'm sure people want to reach out. What is the best way for them to do that?
PadSplit.com will be the best way to get a hold of us. And my email is pretty simple, Atticus@PadSplit.com.
Perfect. I will put that in the show notes. So if y'all want to reach out to Atticus, learn a little bit more about PadSplit, maybe getting involved in co-living yourself, go to padsplit.com. Again, in the show notes, just click a little more in the description. It'll pull down the full description, and in there you can find the URL. So Atticus, that wraps it up. I appreciate you hopping on the show.
Definitely. Well, thank you for the opportunity. Appreciate it and hope we can add value.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. If you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.